Good morning, everybody. It is November 1st. Hard to believe we're only a few weeks away from Thanksgiving already. My name is Pete Renzulli for the morning call here at T3 Live. Hope everybody is starting to get power back. I know here in New York City, everybody seems to be scrambling around just looking for a place to plug in their cell phone. There's actually people walking the streets charging people to charge their cell phone. It's a very, very unique time in the city right now. I'm fortunate enough to have not been hit with a power outage in my apartment. So, again, we are going to bring you the morning call here for November 1st, 2012. Looking at the spiders really quick here. Essentially trading flat here from yesterday's close. You can see here on the chart that we are still within this $1.50 to $1.75 trading range, and to the left you can see the support end of August, early September. There is really not a lot to do from a market perspective. I know a lot of people that are trading the SPY right now or the futures are getting chopped up because there's really no intraday edge. I actually a little bit myself as well yesterday. I put on a short in the afternoon where we started to roll over. I was in the money a little bit, and then before you knew it, we were trading at the highs after hours. The market closed, and we're actually trading 80 cents lower after hours. So it's just that kind of a tape right now if you're trading the market. However, there are some pretty decent opportunities on a stock-specific arena, and just looking at my heat map here of stocks that I go over every single morning in the S&P 500, it's very clear still that the financial stocks are the stocks that we should be looking at if we want to be long. Now, again, keep it in perspective. They closed strong, but not necessarily still in a screaming uptrend. We have a nice little flag here in Citigroup that we talked about yesterday. The thing that you probably don't like about them is the fact that the flags are starting to take a little bit longer. You see over here we had 1, 2, 3 days before we pushed up again, and it just seems to be that really the bottom line is the market is reflecting what's going on in the big picture right now. And I know for those of you that are not living in the Northeast, it's probably not affecting you as much, but it is as bad as the pictures that you're seeing here. So I still kind of think that things are on hold a little bit, for lack of a better way of putting it. Just to give you, for example, Pfizer delayed Pfizer delayed their earnings today. They are not showing them. But working your way through that sector, Lilly, sorry about that, LLY, and Merck, okay, all three of those stocks yesterday, pretty big, decent down day, and trading a little bit lower here this morning. Not the best expectation coming out of Pfizer right now. On the upside, though, we did have Visa. Visa is at this point trading up almost $3 higher. And obviously, just taking a quick look at the chart here, this 142.50 it looks like, I believe. 143.10 actually is the level that we have to get through over there in Visa. So again, very similar to what we talked about with the Netflix Carl Icahn story yesterday. Visa opening up looks like around $5 higher. You have to really ask yourself, what are the odds, what are the probabilities of getting long at this level? Not a question of whether or not both of those stocks are longs. It's a question of whether or not buying a higher opening is the smarter play. I think from a game planning perspective and getting yourself ready for the open, I like pullbacks in those stocks because of how extended they are. Mark Sperling talks about it all the time, looking for a level to bid as opposed to trading the breakout, only because of how far the stock is already extended. A couple other stocks that on the sell short side yesterday, we'll get to the long side in a minute because it seems to be the only thing that is really lighting up the screen right now is the financials. We had Hewlett Packard breaking down, still looks like a good short. Amazon, interestingly, had a really good day the last trading day prior to yesterday, and yesterday produced an inside day. The 200 period moving average has to be the first target that you look at. It's essentially going to open up flat here this morning. So I am looking for intraday continuation patterns, flags, wedges, breakdowns out of previous candles in Amazon, looking for that 200 to be the first target. If we push through with some kind of good volume, there is some room to go. If you look out on the weekly charts, The next level down there is around 210. Now, the one thing that is very, very interesting to note here, though, is Scott is always talking about tactical versus strategic, and something that is warranting a tactical possibility to look for the stock on the long side is the fact that it held at 200, but more importantly, this huge accumulation day here where we had well over 10 million shares. And we actually had something interesting like that in Caterpillar a few days ago here, where this 82 is holding, and huge up day on double the normal volume. So there are a couple of these big cap stocks that look like they could possibly be bottoming out. We covered Visa already. Costco was one of the stocks I was trading as well yesterday. Pretty decent bear flag yesterday heading into two moving averages and did not roll over. I was looking for it to come down and ultimately test what I have here as my 8 EMA on the daily chart, and actually it did not. It's actually trading a little bit higher here this morning. So again, respect the tape. The fact that quote unquote what should have happened didn't, you have to respect what's going on there. Next we have some earnings after hours, Kellogg after hours today, as well as ExxonMobil. I can tell you I spoke about these quite a bit yesterday in the virtual trading floor. Exxon and Chevron, especially Chevron, had a really pretty bear flag yesterday, and it followed through beautifully, tested the previous day's high. Probably see it on the 15-minute chart a little better. Tested the previous day's high and basically trended down for the better part of the day. So with Exxon reporting and this 109 coming in as support, you have to really weigh your risk reward there. If 109, now we have a double, almost triple bottom here. Your profit potential is up to that 109 until it takes out the 109. So really what you have to weigh here is, am I taking at least a minimum 2-to-1 intraday or a shorter term trade into that 109 support? If you have a better reward potential, meaning it opens higher and you still like to sell short and the risk warrants more than just a 1-to-1 trade, by all means step in there, because that was one of the better sell shorts on the board yesterday. A couple other stocks that got hit pretty decent that we might be looking to bottom out here. Again, from a probability perspective, the moving averages, the chart, not exactly the greatest, but when a stock pulls back this many days in a row and ends on a pretty big volume like that, that's not a breakout. You can see the volume on the bottom there. I'm actually looking for this to test $20 this morning, and I'm looking for a spot to bid here in X. Again, pockets of opportunity, nothing spectacular. A lot of the stocks that bounced yesterday, EMC, excuse me, in a downtrend. Ford, the opposite. Ford finally broke through the 1050, 1060 level we're looking for, in pretty decent volume. And GM as well had a pretty decent day yesterday. So there are some opportunities, but then let's put this in perspective. These stocks are still sideways. Okay, we just happened to, actually GM did not break through the resistance, but a lot of these stocks are not exactly what you would call in a pristine uptrend. So put it in perspective. Scott uses the terminology all the time. Mark uses it where he tears into it. Same thing with Evan and myself. Be tactical and make sure that your share size is appropriate in some of these stocks that have less than perfect uptrends, or what we might call your A trade. So wrapping it up here, APC is one of the exact examples of what I'm talking about. A stock that was strong yesterday. Again, you can see pretty good volume on the up day, but really all it's doing is filling the gap in a sideways market. So if you're looking at the leaders from yesterday, we're looking at Goldman Sachs, Bank of America, Citigroup. You know, a few of those. Home Depot had a decent day yesterday. You know, again, it closed higher, but look where it closed off of the high. $2 intraday range in Home Depot is monstrous. If you're just looking at it from one close to another, yeah, it closed higher, but that was pretty decent selling on pretty good volume. So, look, the bottom line is we'd all love to be trading actively all day, every day. Reserve your cash for the few pockets of opportunity where, like, you might have a Netflix yesterday, you know, or one of those kind of things. Be disciplined during the day to find what you're going to call your A trades. And I'm going to finish up the morning call with this quote that I think is one of the best thought processes that you can have as a trader. You're absolutely going to have times when you're going to lose money. It's just a fact. Nobody makes money on all trades. But here's the thought that I want you to have in your head prior to placing every trade, especially in a tape like this where you're really battling to find A trades. When you lose money or when you exit a trade, make sure that you can tell yourself that was my A trade. You want to lose money on your best ideas when you lose money. And I'm not saying you want to lose money, but you do want it to be on your best ideas. So if you have a hard time right now finding great ideas, which is possible. I mean, Visa is going to get some life today. Costco is going to get some life today. Okay, Starbucks is out there today. Apple, I'm sorry, we'll finish up with Apple. Apple, as always, is in play. If you're having a hard time finding something to do, it's okay to be on the sidelines, because when the market does pick a direction that's obvious to everybody, that's when it's easier to make money, and you'll be netting money as opposed to just making money you threw away because you want it to be busy. So as far as Apple, Apple's very interesting. It's got two things going on here. We had a bottoming tail on really big volume on the day we had earnings, and now we have another doji here and failed to make new lows. You have to ask yourself, is this still a good sell short? Yes, absolutely. But then we talked about yesterday, the average true range in the stock is about $13.5. I still like this stock to the short side, and the reason I'm bringing that up very clearly, if you are a bullish Apple trader only and it's continuing to go down, find a really solid risk point to put on your long. Don't just get long because of what happened during this run. Okay, make sure that you are putting on a trade that makes sense. Make sure that you put on a trade where you see intraday a pivot low or a bottoming tail or a doji or a clear double bottom to look for that spot to bid that stock again. All right, so again, I can't stress it enough. Game planning has been tough to find really good ideas, and the market is still in a tight trading range. Be vigilant in preserving your capital unless you could find some really solid A trades, and if stuff comes out during the day that unfolds that makes something a better profit potential based on it getting out of some tight ranges that we've been in, for example, Ford and General Motors, Visa as well. Take a look at Caterpillar that had that accumulation down there, and you might be in a pretty decent situation because you were prepared. All right, this is the morning call. Have a good day, everybody.